Good morning. It's Monday, September 9th, about 6 a.m. Central Time. All right, the precious metals are mixed after Friday's aggressive liquidation across most asset classes. On Friday, we saw another set of weaker employment data and speculation that the Fed continues to be behind the curve regarding its first interest rate cut. The U.S. stock market saw its worst week since March of 2023. So looking at the overnight price action, we got December gold down about $1 at $25.23. Pretty tight range, only about $15 overnight. Looking at December silver, up 24 cents. So that low, 28.03, seems to be a pretty good support level right at $28 right now. We bounced up to about 28.53. December copper, 10-cent range overnight, up 7 cents here at 4.14, and October platinum up $23 at 9.42. So we do have a bounce back about 3.5% in Bitcoin. We also have October crude oil up almost 1% here at 68.26. The dollar index is pretty strong, up 48 ticks at 101, and then of course U.S. equity markets bouncing back after that excessive sell-off here on Friday. So this morning the U.S. equity futures, they are pointing to a partial recovery, but traders are really looking towards the economic data release that comes out on Wednesday. Economists expect CPI to have moderated in August, further supporting the case for a quarter interest rate cut at the Fed's meeting on September 18th. So if you look at economic data coming out today, no real big standouts here. We had some wholesale inventories. We do have consumer credit, but that's after the bell. Tomorrow we really have nothing else except a Fed speaker, but Wednesday's when all the fireworks start, and they travel on through the rest of the week here with that CPI data, also PPI data, unemployment claims, and then we've got University of Michigan, the inflation expectations and consumer sentiment. Looking at the CME's Fed Watch tool, it actually was about 50-50 coming into Friday as far as if they were going to cut 50 basis points or 25. Now it's 75-25 with 75% chance that they only cut 25 basis points. So the recovery that we're seeing here in that silver and copper market overnight, I think it's as this core inflation cooled to the weakest in more than 3 years in China. So it further provides evidence that the consumer demand in China is just really slowing. They're just in a terrible state right now. They even showed them blowing up partially built apartment buildings last week, and it's just sad that they can't complete these projects here and that people are just seemingly running out of money over in China. So really big concerns, consumer demand concerns with the world's second biggest economy. So is government assistance probably coming? That's what traders must be speculating. That's why we're up so much here on some of those China-dependent commodities. Even the soybeans are rallying about 5 cents. So looking at the silver market here, a couple things. Really that $28, I think that's kind of your critical level of support. You don't want to see it close below there. Close below there, chances are you're going to the 50-day moving average, which is 27.45. I'm sorry, the 200-day moving average, 27.45. Now we bounced off that level in early August, and will we bounce off it again? Probably. Time will tell. If you look at a lot of the other markets out there, like the NASDAQ, things like that, they've all bounced off the 200-day moving average for whatever reason. Now, looking at your resistance point, I think that silver's really got to get back over $29. Then you could get 29.58, which is the 50-day moving average, and 30.04, which will be the trend reversal point, but it really just brings it back to a neutral trend. Silver's got to get over 30.54 on a closing basis in order to make this run up to 32. That's why we prefer the longer dated options on there. Looking at some other things here, August 30th on silver, that was really your warning shot. That was when the DMI minus crossed over the plus, and then we also saw that strengthening trend in ADX. It really started to fail, so the upward trend was totally done on that. Stochastics correcting from overbought territory, moving back down. You look at the gold market. That critical level supports, pocket support, it's like 2506 down to 2500. That's kind of your value zone, I would say, and anything really below that, we'd have to check and make sure nothing structurally changed, but I think that dips are going to continue to be bought in there. There was one note that came out over the weekend that said China was pausing their gold reserve purchases, and that may have been part of the sell-off here that we saw on Friday. So looking at the markets also, I think 25.50 is your critical level in that gold market. You got to see a close above there and then build some momentum back up to the all-time highs. It seems like the market just runs out of gas when it gets anywhere close to that level. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.